Welcome everybody to another Okie trade study session. Well, looks like we have a pretty good one here. YYAI, that's the first one I want to start off with, is basically a first bounce day pattern, and you see that it ran over a couple 100% up multiple days in a row. And then it had a big red day. Ideally, you want to see like two or three small red days, but the reason why I trust this one, because usually I don't like to play first bounce days if they have a big red day like that. But every single day, pretty much on these run ups, like it had a bunch of wedges and the stock just traded well. It was like whenever you bought it on a good, clear, long setup, it would work. So basically, I had a faith in the fact that if this setup intraday wise, that it's probably going to work. I didn't go max size because the volume wasn't really there, but I mean, it was there enough that I made a decent amount of money on it. So, it was worth mentioning, breaking down. And again, the daily chart right here is what clued me into why today would be a first bounce day. So we had the big red day, and then we kind of had two small red days here. They look green, but really they're red. Um, Anyways, let's kind of get into the intraday today. So as you can see, typically I would take first high of day versus low of day, which would be right here. But in this case, I wanted to see it hold above and just, if it's a good stock, it's going to give us another entry. And ideally, it's going to give me a wedge because, again, what I say, like on the previous running days, it was a good trader. And whenever it gave wedges, the wedges worked really nicely. So I just waited around for a wedge, and we got nice volume wash to go with it. So that like just gave me extra confidence in it. So what did I kind of look at right here? We kind of had this volume perk, right, with the spike, and then we had this other kind of like volume perk with this sideways action spike. So I drew my lines, and then as it kind of rounded about, I didn't get long here. I waited because this is like so many times topping out at the same number, which was 82, I believe, exactly on the nose. I just waited for the 82 break, and that's where I took it right here. But my stop right here was 80 because we had one, two, three bottoms there. Made sense just to risk that, right? And of course, it did pull right to it, but instantly reclaimed. And I thought, okay, this is nice again. And then I noticed that we had this volume spike, and it was lower than this one, so we could draw our lines. And then we got this nice sideways action at 83. So basically I could draw my line again. And we had two wedges now. And as it came up and broke right through 83, I got long again. And I moved my stop up to 81 here because there's no sense of it pulling under 81. Like if it was to go under 81 from here, it's most likely just going to snap 80. So, and if it did pull under 81 and hold 80 and then come back through, I would probably just get back long again and expect it to surge again. And if that failed, well, then obviously I wouldn't even touch it after that. So that's kind of how I would approach that scenario. But it plays nice because YYAI tends to play nice. And I mentioned that earlier again that, the stock just really likes to work for longs. And then we get this nice spike up. So I sell 1/3 of my position. I have two entries. Really nice tight risk to reward as well. This was a pretty solid risk to reward trade right there alone, but that was only 1/3. And then we had, excuse me, I got to get a drink of water here. We had another spike, and I noticed it started to stall out, so I sold another third there, and then it holds. and we spike up again and start to stall out, and I sell another third right there, and I'm just out. And then obviously, we had this nice little sideways action. My target was 1, and I knew that if it went through 1, I'd probably have a little pop to like 103, something like that, 104. And it made a move all the way up to 108. So really nice move. And again, I'm gonna lock into spikes, especially if my risk to reward is a lot. Like I was risking 2 cents on my first entry at 82, and this was at 94, so that's 5 to 1 on that one. And then I was risking 2 cents on this one, 81 to 83, same deal. So 5 to 1 twice is basically 10 to 1 if you think about it like that. I guess it would have been 20 to 1 up there. I mean 10 to 1, not 20. Forgive me, but yeah, really good trade overall. And a lot of people slept on it and saw that the volume was low. And when you zoom out, it does kind of look like low volume or whatever. But when we zoom in and we're real focused, and you see me break down every single aspect of the trade, it really should make a lot of sense to you. All right, well, now I just want to talk about what I call day one gappers, or just they randomly hit the low float scanner basically. And what am I looking for right now? The theme that I'm playing now is wedges. Obviously, that's what we talked about all day, but I'll trade a first high day break on 2 daily chart patterns, which are multi-day breakouts and first bounce days. And then everything else right now, I'm only trading wedges. So if I see something pull up on the low float scanner, I'm only looking to trade wedges on those. If it doesn't have a daily chart pattern, I'm only trading a wedge on a low float right now. And I do believe that the theme has just started, so we got at least another month, if not 2 months. Usually the wedges typically last until July, sometimes leak up until August. So we could have a good stretch on our hands, so it behooves you to really study up on these wedges right now. And the main thing I really want you to focus on, other than good daily charts, is this volume wedge. Like, you see, like that volume wedge is everything, because it tells you not to buy it here, because it's saying that the best entry is going to be right around this area. And then obviously the chart's telling you no, you need to wait for this to break, and it pulls back, and then you say, okay, it's getting real way too tight now. And then you say, okay, it's getting so tight, and then it has to break one direction. It's like the volume leads you to the best entry, and then the chart tells you yes or no, and then you go back to the volume, and then you just go back to the chart, back and forth, and they help you find the best entries when you work with the volume. I don't know how else to explain that, but the volume is the most important thing, and not necessarily how much volume, but the shape of the volume. The closer you get to the tip of the point of the wedge, see, notice how, let me show you if I can make it any kind of simple here. If I draw this line from here to there, like it's saying that, like, I don't need to be looking for an entry anywhere close to here. It needs to be somewhere over here, because notice how the point of the wedge goes all the way down to right here, right? But see how it starts to break through? That's telling us something. Whenever it breaks through right here, obviously we have this new entry, and that's why it did that right there at 83. See how it broke above it right there at the same point? They always do that. They break at the same time right here. See this one? Right there. Same candles, you know? I don't know how else to explain that. You can see it again right here, right? It breaks the wedge, and then it breaks that wedge. These things help you to not only avoid losers, but help you to have more confidence in your trade. So just really focus on these volume wedges. I really want y'all to focus on that. All right, AIRE. So, okay, if you didn't even see the volume wedge, right? You would see here's a low, here's a low, so that's a higher low. Here's a high, that would be a higher high. That's a wedge. That's all a wedge is, right? That's all a wedge is. Now look at this. Here's a high, here's another high, there's a higher high. It's a wedge. See? And notice how they break at the same time. It's very important. And notice it's there is some wickiness, but it's not too wicky. It's very tight. So we have this, right? Beautiful trade right here in my eyes. And if you missed that, I wouldn't blame you. It was pretty quick. You know, maybe you saw it right here and you had 1, 2, 3, 4 minutes to catch it right there. And everybody goes, "Oh, this is hard." You're darn right it's hard, because if it was easy, guess what? Everybody would do it. And then no one would make any money at it. So, this volume wedge right here though, that's like a secret key to it all, honestly. Like, I've known it for a long time, and even though you're hearing it, you may not really respect what I'm telling you for another year or two. It's really hard to say. But honestly, like, if I don't have some semblance of a volume wedge with my wedge, I just don't even trade it. But if I get a perfect volume wedge with that lines up perfectly with my volume wedge, I know I can take some more size. It's a really great, I don't know, tool to have in the tool belt to know with wedges. Because I've traded wedges for a long time and I didn't necessarily respect the volume wedge like that. And I paid the price. And now that I am, I'm reaping the rewards. So we had that move, right? Makes a big move, pulls back really hard, but notice it holds up. And then there's nothing here. There's no like clean looking setup at all, right? Same thing here. Like, this is kind of like that U shape I'm telling you about. Avoid that. And then this is V shape. Avoid V shape. But now we get this nice sideways action. Beautiful, right? So, what do we got? We got this one. And then we need to let the volume guide us. It's very simple, like once you really get it down. Like, okay, so if we were drawing lines from here to here, our volume wash would never happen until end of day. So we know that can't be true. So we're gonna have to use this as our starting tip. And the volume coincides with it. So that's how I'm looking to approach these longer ones. Now I'm looking to use this middle big spike as the whole new, just I'm forgetting all this behind this line, like it doesn't exist. And then, okay, so we get this big spike up right here, right? But there's no volume to go with it. And this volume isn't that strong. It's only the 80, 100,000. If it was 500,000, a million every minute candle, then I would say, okay, the volume's good enough. Well, I could probably take an entry here and something like that. But in this case, since the volume's lower, I would pass on something like that because the pattern isn't that great. Okay. So I want to see a spike with volume. So now that we get this spike up right here, look at that volume. So now we can draw our line, right? And then we have this low, higher low. We can draw our lines here. And then look what happens. When it breaks the wedge, it breaks that wedge. And then we get this huge volume burst, which is what I like to call, or Dan Irish taught me, volume confirmation. And then obviously we get a monster run. So I want you to know that you really need to either have huge volume to have not a perfect volume wash, or you need to have a perfect chart if you have okay but not perfect volume wash. But when you get a perfect chart and perfect volume wash, basically right here in this scenario, you know that it's not only a good buy, but it's something that you probably want to take a little bit more size on. Maybe instead of scaling out half, like selling one half here and the other half here, maybe you scale out in fourths. You sell 1/4 here, another fourth here, another fourth here, and then another fourth here. You know what I'm saying? So that's a really good trade example. And the last one of the day. But before we get on, I just had a thought that occurred to me. Um, in a true hot mania like in 2020, 2021, we would see 7, 8, 9 wedges a day. And I mean, not just wedges, I mean, all kinds of setups, but 9 stocks having maybe 4 or 5 wedges sometimes on each stock. But now what happens is you get maybe 3 stocks giving 1, maybe 2, if you're lucky, 3 wedges on each one. So the numbers are cut down at least in half, if not by a third. But my goal is to catch at least one of these wedges. If I really nail one of the wedges, I know there's going to be at least 3 opportunities right now every single day to catch an amazing wedge. So all I have to do is sit around and be patient, wait for the most amazing setup, perfect setup, and just nail it. And I don't need to jump on anything that isn't perfect. I mean, and again, sure, there's only 3 setups, but I don't need to catch all 3. I only need to catch 1. So if I see one and I missed it, oh well, I still got 2 opportunities. That's kind of how I'm approaching it. But guess what? If I catch one and I'm feeling really confident, I might try and take another trade. Now, if I do take one trade and it was a tough one and it just failed really hard and I'm not feeling too confident, I might just take my money and run on the day. You know, you just kind of have to really have an open mind to the day and just look at things, I don't know, from without your own like emotions, blinding what the market is trying to tell you to do. You know, I don't know how else to say that. So I hope that really stuck with you. But we got one more example. I took this trade as well. I took YYAI and WISA. I didn't even see AIRE, but I nailed both of YYAI and WISA perfectly. So what did I see here? Well, let me zoom in. Oh, first I wanted to talk about the fact that we had this V shape, right? And that's not something you ever want to buy. But I think shorts said to themselves, okay, this is a great short. And then it smoked them, okay? And it didn't pull back hard. It held up. Now, this right here is a nice wedge. Where's the volume wedge? It's not there. So what happens? It fails, okay? So that's something that I wanted to point out there. 2 nice little examples that tell you to stay away. If you get proved wrong, wait for something clean. This was not clean. Why? No volume wedge. Also, it's a bit like a long stick. You know what I'm saying? And a little flag. Like, we need a bigger flag for such a long stick. You know what I mean? They need to kind of be proportionate. Like, if you have a big, long flag, you don't want a little stick. I mean, if you have a big, long stick, you don't want a little flag. And the same thing, if you have a little stick, you don't want like a big, long flag. It's just like, it's probably going to fail. What you want is proportional. Medium stick, medium flag. You know what I'm saying? It just makes sense. Okay. So, right here, people would say, oh, why doesn't that work? You got the volume wash, you got that. But again, look at it. It's forced. Look at it right here. It's more V-shaped, isn't it? Like, you just can't take nothing that is yucky. All right, nice volume wash. I mean, I admit that's pretty decent. But that wedge is just like, all right, it's like a little dip, quick spike, quick dip, quick spike. Like, there's no consolidation to it. There's no clarity. I don't know how else to say that. But then, like, all right, we pull back, right? And then we get this nice, like, action. It's clean. How clean that is. Doesn't get any cleaner than that. I'm telling you right now. And then when it breaks the wedge, what happens? Big volume burst. That's how you know you're in the right spot. So, I knew not to take this trade. I just saw it coming. It was a bad trade. Now, you can do like Nate from Underground. Every time he takes a trade like this, he risks a wide spot. So, it did hold that spot, right? So, there is other ways to trade. You know what I mean? The same type of setup with the same type of idea with just different risk to rewards. Me personally, I want tighter risk to reward and I want to be right away, pretty much. So I saw this. This is this volume spike, right? There's a bit of a volume spike. And then we can draw our line, draw our lines, draw our lines. And then what do I see here? I see basically like this topped right here. This was just under, and then that basically topped just under as well. So I felt that over that line is most likely going to spike through the wedge. Now, ideally, it would have not, and then just kind of gave another dip right here I could have added to with a new risk, but I just had this feeling that it was going to bust through, so I got long right here at 624, I believe, risking 610. I was looking to get long, I think at, yeah, 622, something like that. But anyways, it's not bad, Phil. And right after I buy, it pulls really hard, and I was a little bit nervous, but instantly reclaims and breaks. And I sell half right here, pulls back. But since I sold half, I'm just chilling. I got my stop, and then spikes back up, and I sell the rest right there. And then, the rest. You know, this right here, I can't say it wasn't a bad trade, but if you just look at it, it's super forced. You don't really want to buy a stock that pulls from 670 all the way back down to 620 and then spikes straight back up to 660. Like, that's just too volatile. Like, we need some structure with our stock. We want volatility after a clean entry, and then we want it to hold. We don't want it to spike up and then dump, like, and then spike back up like a trampoline because, yeah, that's no good. So, really, you have to just, right now, just wait around for the best of the best wedges. Otherwise, you are going to lose and it's going to be very frustrating. And I understand that completely. So, again, if you want to, you know, I do this every day, but you can chat with me in the Small Cap Rockets room live. And then to top that off, like if you say, hey, is this a good wedge? I can look at it and say, most likely no, or yeah, that is a good one. Good eye pointing that out. You know, while we're live trading. So there is that. But anyways, hope y'all have a good day and keep studying. Keep it up. Keep to the grind. All right, take it easy, everybody.